right. We are live here. It is January 30th, 2023. We will give a couple minutes here for everybody to get connected before we start the program. And we will go over our down payment assistance programs here today. So let's give everybody a chance to get connected as we go live on all the platforms. We'll get started here in a second. Thank you everyone for tuning in early. We are now live on a couple more platforms. Just give us another couple seconds while we get pushed live and people get connected, and we will go into the show. Okay, it's about time. We are live now on all platforms, it appears. It is just after 11 a.m. on January 30th, 2023. So we are here today to do the Daily Rates Live show. Welcome, my name is Nick Hiersche. I'm the president and founder of the Mortgage Calculator. We are a lender that specializes in some amazing alternative income programs, as well as your traditional FHA, VA, USDA, and conventional loans. But we love to do these daily rate live shows to go over all our common options, show what the markets are doing today. And then we will go into a very specific example with our teammates. So I'm joined today by Jose Gonzalez, our sales manager with 27 years of experience, who will go over a deep dive into a specific program. And Kyle Hiersche, our COO, will let everybody know how we can connect with our team in order to actually follow through with a loan program. So before we get into the regular stuff, let me go ahead and explain a little bit more about the topic for today. So after we go over the general rates and the general markets, we are going to have Jose do a deep dive into down payment assistance. So very common requests for borrowers that maybe need a little bit of extra help. There are programs out there. And with the recent volatility, a lot of those programs were not as attractive as they once were. Thankfully, now some of the markets have calmed down, and we are now able to, again, offer some more of these programs and more varied variety of these programs. So I will have Jose go into a deep dive on how a customer will typically do an FHA loan with a down payment assistance program. There are also all kinds of cool options for, not refundable, to not have to pay it back. All kinds of things depend on the specialty programs. So it is a very picky type of program, but when it works, it's a pretty amazing opportunity for our borrowers who may not otherwise qualify. That's what we're all about here, is finding ways to qualify people. So we'll get into that here in a minute. Let me go ahead and get started with the regular programming, and we'll go through the regular rates for today. So let me pull up our pricing tool. So this is our tool for our mortgage loan officers. We have over 350 loan officers. We're licensed in 17 states for primary and secondary homes. We love to do our investor programs as well. We can do those in almost every state for our business purpose loans. So this tool is just a tool for our professionals to check out the rates and programs for, in this case, this morning. Again, it's January 30th. We're going to check out the general indications. If you are a borrower and would like to get a full loan estimate, please get with our team members. They'll be able to quote it in a few minutes and give the full breakdown of all the loan costs and the full loan estimate. But we'll go ahead and just check out some general rates for today to see where the markets are going. So for our examples, our scenario, we will use an 80 LTV loan. That's 20% down, 80 loan to value. Desired price, that's for mortgage professionals. But what that means is we're going to look for a loan that has about 1 discount point in price. And that is typically our requests these days with a little bit higher rate environment. Most borrowers want to buy the rate down a little bit. So this will give us our average request, where we're going to request the computer to print out the best program at around 1 discount point in price. First, we're going to go through our conforming options, but we love our expanded guidelines, aka our non-QM options here. That's what we really specialize in here at the Mortgage Calculator. So we'll do a little bit of that here in a minute. And we'll go through FHA as well. And that is what Jose will be doing a deep dive in with our DPA options shortly. And VA is available for our vets. So if you qualify, that is amazing. We appreciate your service. Please get with us. We'll quote it in a few minutes. But since not everybody qualifies that's watching today, most likely, we'll skip that for the live show. Please get with our team. We'd love to quote that for you. Same thing with USDA. Those are based on properties in rural areas. So if you're not looking in a rural area, this wouldn't apply to you. So we'll skip that for today. Let's start with our conventional conforming options, which are typically the most common. Purchase, 30-year fixed, pretty much the most common scenario here. We're going to go primary, single family home, 1 unit for all our examples. And we'll use Miami-Dade County in Florida for all our examples as well. We'll go with 760 estimated FICO for our example pricing and an estimated debt to income ratio of 40 here. And we'll go ahead and check out what our rates are this morning. And this is a live tool, so let me get through our verification to make sure I'm a real person. And we'll check out our conventional program. So Home Ready does require a couple different qualifications for the borrowers. So we'll skip down through these specialty programs to the standard program, just for the example purposes. And looks here, we have our conforming 30-year fixed option at a 6.125 rate for just under 1 discount point. Costs is what the computer printed out as the best option there. So that's, I believe, the same it was on Friday. So not much change since the Friday and Thursday rates that we've had there. But we love to do this show every day to check out what the options are. Now, if a borrower does not qualify for conventional or conforming, typically the next option is going to be an FHA program. So we will check out an FHA program using all of the same scenario, 80% loan to value, 1 discount point in cost. Everything else will stay the same here, and we will check out what our FHA rates are this morning. So right here at the top, looks like the computer spit out, I believe this is the same as the last show as well, 5375 for around 1 discount point in cost. And just keep in mind, FHA does have some additional fees there, which affect the APR. So whenever you're looking at FHA compared to another option, just look at APR because there are some additional monthly mortgage insurance and upfront mortgage insurance fees on the FHA programs, but great options for borrowers who would not qualify for conventional that can use some of the relaxed FHA guidelines to then qualify. Now, let's go back to the pricer and pull up our favorite example here. If a borrower does not qualify for conventional or FHA, many banks or lenders do not have options. That's where we love to step in at the Mortgage Calculator and offer our thousands of expanded guidelines or non-QM loan program options for borrowers who may not fit the conforming or FHA guidelines in that specific scenario or at that specific time. So these options do open up opportunities for our borrowers who would not otherwise qualify at all to still purchase the home of their dreams. So we'll keep everything else the same. Primary, single family, 1 unit, everything else will stay the same. But now you see here we have a new option for income verification. So instead of full doc like all of the conventional and FHA programs, we can now select new alternative programs. So 1-year alt doc, 2-year alt doc. We can do asset related programs. We did that last week on the show. We can do business bank statement. 12, 24 months are the most common. When you're doing a non-owner occupied for an investment property, we have a couple different really cool options we'll talk about in a second. And our most common options are our personal bank statements. So for this example, I'll choose our 12-month personal bank statement as our most common request program. Once we go beyond the limits of conforming or conventional or FHA, we will use 12 months of bank statements for a self-employed borrower because maybe their tax return doesn't quite show as much income, but their bank statements show a very strong monthly income. We'll use 12 bank statements to determine a debt to income ratio. So with these alternative income documentation programs, we'll use alternative income to determine a debt to income ratio, which is the typical measure that we use for all loans. So this is alternative documentation, going to be a slightly higher rate than both conforming and FHA, but let's see what options we have. So right here, the first option, a 7.375 rate for around 1 discount point in cost. And we have dozens and dozens of programs that use bank statements. Remember, all these are specialty programs. That's the nature of non-QM. So please get with our team where they can find the best program for you. For example, many of these programs that may be for a higher rate may have a little leeway on such things as credit events. There's non-QM programs where you can do 1 year out of bankruptcy or 1 year out of foreclosure, other types of credit events and other specialty qualifications we can layer on top of the great income documentation options we have here. So get with our team. They'll navigate all these hundreds and hundreds of options we have. But you see we have some options as low as 7,375 for 1 discount point in cost, which is not that much higher than conventional. And again, this would allow a borrower who would not otherwise be able to purchase a home to still get that home of their dreams. So great opportunities for our realtor partners where they want a little more house. Maybe they qualify for a smaller amount conventional, but we can use these programs to qualify for a little bigger house in some cases if their bank statements are stronger. So those are great options for primary homes. Now, let's go ahead and switch gears here and switch over to investment properties. So we will pull up the same scenario here, but we'll pull up investment property. So this would be for anybody that might be purchasing their first rental property, maybe for an Airbnb, all the way to our investors we love to service with hundreds of investment properties. So for those investors, conforming is not much of an option, but let's check out for people who are comparing conforming to non-conforming or non-QM, what the options are for a conventional loan for a purchase of an investment property with 20% down with DTI of 40, just the same as the other examples. We will check out our investment property options. So you'll see here there is a little bit higher rate than what we saw on the primary, but what's important to remember here is the government entities, Fannie Mae, Freddie Mac, have added an additional cost to investment properties. So what you don't see is a low cost option. So there are some great rate options, but we see here just under 3 discount points. The computer was not able to find an option with 1 discount point in cost under the conventional program. So still a great option to get low rates if you do qualify full doc conventional and you still want to purchase an investment property. That's great. There are just some additional discount points here to consider. Now, a lot of our investors, especially those with many properties, over 5 or over 10 or sometimes hundreds of properties, they're obviously over the conforming limit anyway, because you can only hold up to 10 conforming loans typically at a time. So for those borrowers or for borrowers who are interested in a lower cost option, that's where our non-QM options are amazing. So instead of conforming, we can go to expanded guidelines, aka non-QM, keep everything else the same here, go to investment property. And for our income verification, under alternative income verification, our most common request program is our investor DSCR, because this does not actually require any income verification or employment documentation. What we use here is the debt service coverage ratio, just show that the property has a strong rent roll in order to cover the mortgage expenses, the PITIA of the property. And these are great options for our investors that have hundreds of properties, because there's no limit in the amount you can do, as well as our investors that are looking to have a lower discount point option and maybe lower their closing costs. On all of our non-owner occupied non-QM programs, we typically have a prepayment penalty. That's just common for the non-QM programs. We typically quote with a 3-year prepayment penalty. There are 0 prepay options, of course. That's just going to be a little more expensive. And there are 5-year options if you want to save a little bit more money. There are some options that have a little bit of savings if we go to 5 years. So for all our quotes, we'll use the 3-year here. But if we compare this to the conforming options, we'll see that there's still some great rates in the 8s here. And remember, there's no limits. So investors with hundreds of properties, you can still get dozens of these loans, no problem. But most importantly, lower discount points. So because we can go up in rates a little bit, we can lower the discount points and make our investors happy, make their money stretched longer. So a lot of times if the property cash flows and the DSCR is strong, the investor may not care or be as rate sensitive as much and be more discount point sensitive. So this is a common request for us. Remember, there are dozens of these programs here, so please get with our team if you'd like to find the program that best fits with you. They do vary widely, as I mentioned before. And you see here the DSCR value does vary on all these different options. And for example, we do get a lot of Airbnb or short-term rental requests for people either with their first or 100th property again. And that does affect these programs. So please let us know if you're looking at a property that may need to use the short-term rent income. We do have a ton of options for that. And that does open up a lot of new properties that maybe weren't able to fit under the DSCR programs that we can still make work with the short-term rent. So a lot of great options under this program. It's our favorite by far as me and Jose. We love to do these. So please get with our team if you'd like to check that out. Now, that is all we'll go through for the live rates. So let me switch gears here and introduce our deep dive topic. Let me pull up my graphic again real quick. So today, as we put in the description here, we're going to go over some down payment assistance programs. So those are programs to offer a second mortgage. Typically, doesn't have to be repaid as long as certain parameters are met, and it allows borrowers to get basically a grant or some other type of government-sponsored program to get 100% financing. So we typically do a standard FHA loan to the maximum on the first, and we'll combine that with a down payment assistance program in order to get to 100% loan to value. So a very common request for borrowers who maybe need a little extra help, but they are very tricky. So I'd like Jose to kind of go through a deep dive example, explain a little bit of the pitfalls and common misconceptions of the program, but most importantly, pull up an actual rate example and show everybody exactly what the program might look like. So let me go ahead and highlight you, Jose, and you can take it away.
Awesome. Good morning, everybody. Thank you for joining us today for Daily Mortgage Rates Live with the Mortgage Calculator. Today, we have one of those very popular programs. I guess it's almost like an aphrodisiac, the DPA, Down Payment Assistance. Now, what exactly does that mean and who can benefit? Because there's been a lot of chatter on what is possible. Well, to begin with, not all of the DPA programs, at least the ones we're going to be discussing here, do not require the buyer to be a first-time home buyer, right? So the example we're given today is that FHA programs structured to help low to moderate income borrowers. But again, they do not have to be a first-time home buyer. Very important to note, because they're really trying to reach out to anybody who needs the assistance, who's low to moderate income. That's the big key. The other real interesting point on the DPAs is that they do have a forgivable feature, which is what makes them very attractive. Usually there's, in this example, I'm going to explain a little bit on the example we have here, but they normally have some kind of requirement that the property, they need to live in it for a certain amount of time. It has to remain a primary residence, so forth and so on. One of the biggest challenges we were having in the last year in the DPA programs, that with all the volatility that we've been having with pricing, margin compression, and so forth, the DPAs had switched over to borrower paid, which was presenting a really big challenge because you already have a borrower with limited funds. And if you're going borrower paid, that means the compensation for the loan is paid by the borrower. And that usually entailed having to get creative with finding a motivated seller that was willing to pay, seller credits, seller contribution to the borrower's closing costs to make up for the borrower paid comp, and also obviously to try to help out with closing costs and the like, to try to make it a pure zero money transaction. So, that may work in some markets and it may not work in other markets where they are still not offering seller contribution. So we have a very good example now that I'm going to share with you, which is an example for 3.5% of the down payment as a down payment assistance program. So in other words, 3.5% of the purchase price, as the down payment assistance. So ideally, that 3.5% of the purchase price can be used for the down payment or could be used for the closing cost, whatever, or a combination thereof. It is basically 3.5% of the purchase price that the borrower is receiving to assist because they don't have any money or less money. So again, our specific example here is a forgivable loan that if the borrower makes timely payments for the first 60 payments or 5 years, then timely payment is considered no 90-day lates during that 5 year during the 5 year time frame. So during the 5 year time frame, there's no 90-day lates, and at the time that you hit the 5 year mark, payment number 60, if you're currently current at that time, then the loan is forgiven. This second loan is a 0 interest 5 year loan. So I'll go a little bit lower here in our example so you can see a little bit more. It's 7.375% is our lender paid rate. At 7.375, there is no loan discount that's tied into the rate, which is very good. And again, this is lender paid. So the full compensation is coming from the institution and not from the borrower. And in the example here, just so you can see, we had a $14,000 loan. There's no payment associated with it. We put a rate there of 7.375 just to match the note rate, but there's actually in this program, there is no payment that is due for the 5 years. So again, no payment due, forgivable after 5 years. Very good option. This is probably, other than those bond programs that are specific to areas like a certain MSA or a certain county may decide they got some leftover money and they're going to throw it out there to some affordable housing programs. And those tend to be the ones that are for first-time home buyers and have income restrictions and a lot of other things going on with them. Excuse me, that's not what we're talking about here. What we're talking about here is a more streamlined process that only requires home buyer education if the DTI is above 43%. So again, very streamlined. If you got a strong buyer, just needs a little extra help with the funds, and you got a 42.9% DTI, they don't even have to do home counseling, which makes it a lot quicker. Those regular, more traditional type of DPA programs, they do require home counseling. It could take a while for the money to even show up and be available for the program. You sign up, you get approved for the program, and then you wait for the gatekeeper to open the door and tell you, we got a little money, everybody apply, and then everybody applies, and then you hope you find a home in time before the money runs out. That's not the kind of situation we have here. It's more user-friendly for everybody involved in the process. Obviously, it's not a 30% forgivable second mortgage or anything like that, but it is enough to make it worthwhile, so that if you do have, let's say 3%, 3.5% seller contribution, and you have this 3.5% DPA, you could essentially have a borrower that buys a home with no money down and no money out of their pocket. FHA does not require any reserves. So this is a pretty cool deal to be able to structure. Again, especially if you can get a little bit of seller contribution. And I think the sellers are easing up a little bit with that in most markets. So, our realtor partners should be able to wheel and deal for us and be able to put some of these deals together. So very good program, forgivable after 5 years, if no late payments, 90 days or greater.
Let me pass it over to Kyle then, who can talk about how to get with our team to get a quote if you're interested in checking out one of these programs.
Absolutely. Thank you. So as Nick said earlier, we have 350 loan officers from all across the country. We are licensed in 17 states, and we can do the DSCR, business purpose, and those investment type loans in most states across the country as well, which Nick was going over earlier. So if you're already working with one of our loan officers, or maybe they shared this video with you, that's great. Connect with them. They can get you out a personalized quote for your specific situation within just a few minutes. If you're not currently working with one of our loan officers, you can go to themortgagecalculator.com, which is actually right here, and we can connect you with one. You can actually apply instantly online, or you can send us an email to info@themortgagecalculator.com, and we can connect you with one of our loan officers that way. We do this show every weekday at 11 a.m. Eastern time, so we hope that you will tune in every weekday and see the daily live rates and see the deep dive that we do into one of the programs, which we do every day for a more specific program. So thank you, everybody, for tuning in, and we will see you tomorrow at 11 a.m. Eastern time.
Thanks,
Take
everybody.
care, everyone. Have a good day.